Hi everyone. Today I'm going to discuss about a magical tool that is MACD. You'll all aware about what is MACD. Moving average convergence and divergence, that is commonly known by everybody. It is used by most of professional traders, but as newcomers or beginners, you may not aware. Even some professional traders don't know there are some techniques to read this MACD. MACD reading is not an easy task, but once you're familiar with it, definitely you can get the trade at right time. Actually, MACD is a kind of a lagging indicator, not like that RSI and stochastic RSI, those are leading indicators. So MACD, if you are going to wiki, it says we'll read what is on wiki about MACD. MACD is short form of moving average convergence and divergence, and is a trading indicator used in technical analysis of stocks prices. It is created by Gerald Apple in late 1970s, and it is supposed to reveal changes in the strength, direction, momentum, and duration of a trend in stocks price. Here, very important: strength, direction, momentum, and duration of a trend. These are the major outcomes we can get from MACD. We'll see what are the parts of MACD here discussing. It has discussed in this wiki about MACD. There are 5 areas. The first one is signal line crossover, and second one is zero crossover, divergence, timing, and false signals. Here, signal line crossover occurs when MACD and average lines cross. That is when the divergence, the bar graph, I will show you what are those things. The standard interpretation of such an event is a recommendation to buy if the MACD line crosses up through the average line. No need to read everything. You can go through wiki and you can find out what is MACD. Yeah, we'll see what are those steps. Here, what I want to tell you, actually I'm not using all the 5 steps, 5 parts of this MACD. What I'm using here, zero crossover, very important strategy, and the divergence. These are the things I'm looking after, and signal line crossover, timing, and false signals. Most of other users are using, but for me it is somewhat confusing. For example, signal line crossover, there are a lot of noisy, so you may mislead by those signals. We'll see what is it. For example, I will take Expo. First I delete these drawings. Expo Lanka PLC, and we'll see what is going on there. Here is weekly chart, and I will take MACD here. So as we mentioned, there are 5 parts, and you can visually see the signal line crossovers. These are the crossovers. See, these are the crossovers, and this is MACD. What I am using, the zero line crossover as well as the divergence. we'll see what are these means to a trader. First we'll look at I will show you what are the parameters there. So histogram, I'm using histogram only for to see the zero crossover and the divergence. I am not taking signal line and the MACD, because here, as I mentioned you, if I am using signal crossover, you can see here it is telling to sell, right? At that point it's saying telling us to sell, and again it is telling us to buy. Those are the things. For example, if you say take it here, it says in this place, right, it is to buy, but what happened, then next moment it is to sell. So it is giving a lot of confusing signals, and you may not able to take the correct direction, um, since it is lot of noisy. So what I'm going to do here, I will remove MACD and signal line, then only I'm keeping the histogram. So I'll make it somewhat bigger than the normal, then you can see what is there. So here MACD histogram.
If you take Dialog Exiata PLC, for example, you can see from last 2010 and to the 2012, end of 2012, it was on a downtrend. At that time, what has happened? You can see it was on a downtrend. It was on a downtrend, and MACD was on a uptrend. We call it divergence. So the basic thing you want to understand here, if there is a divergence developing, you have to expect in future there will be a huge move. That says MACD itself says there is a huge move in future. So you have to uh, prepare for that trade to take. So as I mentioned, it went aggressively up by crossing this zero line. You can see it has crossed the zero line and aggressively went up. So that means now it is in uptrend. So what has happened, if again you can see again it has crossed the zero line. At that time, by looking at that price action and the patterns developing within the price, it is not in a downtrend, it is in uptrend. So you don't, if you sell at this point, you will be lose this big move. This big move you will miss, this big profit you missed. So what you want to do, you have to, if you are, if for example, let's say if you didn't enter on this place, if you didn't enter on this place in this area, wait, I will show you. If you didn't enter on this place, this area, so you have another opportunity. If wait, we are not catching these running candles, we don't know what is going to happen, we don't know whether it is going to aggressively down. So what you want to do, you want to wait and see what is price going to do. So price has developed a continuation pattern again. So it has emphasized by developing the small blip on MACD. So at that time you have to buy again, buy at the lower place, so you can ride this whole uptrend other than selling and after that get upset by looking at this potential. What happened after that? This is the divergence. Give me 1 second, I will draw it nicely. This is the divergence, and while, even though it is uptrend, while on that uptrend again developed a divergence on MACD. So as I told you, if divergence is there, that is we have to expect a price uh, reversal, huge price reversal. It has happened here, it has happened in this area. It is reversed aggressively. Here the divergence price is going up, MACD on downtrend. Meanwhile, you can see the blips. On those blips you have to re-enter. Here you have to re-enter these areas by looking at the price and the indicator. And if you look at the indicators on these area, for example RSI, it may on the overbought area and the divergence developed. So you are now going to expect another big downtrend. At that time it will be confirmed by several indicators as well as price actions as well as candle patterns. Here what is the candle pattern? You can see there is a candle kind of a star pattern, and after that bearish engulfing pattern. So at that time the divergence here and indicators like RSI, those indicators I will discuss on future. RSI, stochastic RSI, they are on overbought area, and you have to get rid of this trade with huge profit on this uptrend. So at the moment it has developed this huge candle. You can see developed this huge downtrend. The power of downtrend is still enact on the market. It is not aggressively going up or down. It is on a corrective phase. And meanwhile you can see MACD has developed small price action near zero line. Here near zero line, here everything near zero line it is developing. So that means there is no power at the moment. If you especially see that end of this line, there is no, at the moment there is no power because the price has no power because it is mingling nearby zero line. mingling nearby zero line. That means there is no power. Though what you also you can see by last week I show you uh, how to draw structures by looking at structures. This is the um, collaborative or cumulative action. You have to look for the structure and you have to look for the price actions like these continuation, and you have to look for the camel patterns like this. And if for example, and also indicators, and for example in this area RSI in over bought area, and MACD has no power, and it is in future reversal point. So at this time what you want to do, you have to wait and see what is price is going to do. If price is giving us aggressive candles to uptrend, you can buy. Otherwise what you want to do, you have to wait till it comes to a future reversal point to buy again. Unfortunately in Columbus stock market there is no short selling. If you have short selling, this is a good opportunity to wait and see price is going down and take the short sale. But in our market only one direction, other direction we have to tightly hold our hands and wait to see what is going to do in price, and what is where can be we can enter the trade again. There are several places. For example here you can wait and see what is going to do price. If it is going aggressively up, you can buy. If it is not giving big moment to uptrend, you have to wait till it comes to the next reversal point. I think the MACD here I will show you one divergence there, and after that what has done, it developed a huge uptrend, ABC pattern here, A B C, with the continuation here. Sorry, A, then continuation, then B, A B C, right? If you look at this whole trend after that this reversal, it has come like this again, ABC developed, right? A B C pattern, and at that time divergence, this time divergence, so divergence. So this is downtrend, this is uptrend, and you know now how to read the blips, zero crossing blips. If it is in uptrend, don't sell because of it is developing small blips. You know, by looking at price and the indicators, you can see it is not going to aggressively down, right? For example here you can see now it is not going to aggressively to either direction because it is near a future reversal point, and it is there is no power to the MACD at the moment, and we have to wait, get the direction. If as soon as we get the direction, we will exit from the trade. If it is in a downtrend, as soon as get the direction to the uptrend, we will on a buy. Right, I think today enough for today. We will discuss other indicators. This is actually MACD is a lagging indicator. There are leading indicators like RSI, stochastic RSI, those indicators, and how to take the direction of a trade profitably and the optimal price, optimal place by resultant of these all, taking resultant of these all indicators plus um, candlestick patterns, um, price section patterns, and the structures. Have a nice day. Bye bye. Thank you.